People always want the secret. They want some rule, some little trick that will catch the big moves in the market. They think it's hiding in some book, or whispered in the corner of a brokerage office, or buried in some pile of ticker tape. But the truth of it is simpler, though it's harder to live by. The rule that makes the difference between catching a move that makes your year and missing it entirely isn't fancy. It's not about some clever chart or mysterious calculation. It's about sitting tight. That's the rule. And I'll tell you why, if you're willing to listen with both ears open. Let me ask you something. Have you ever been in a stock? You caught the right side, and it started moving just the way you hoped, and then you sold it too soon. Tell me, how many times has that happened to you? You were right, dead right, but your pocket didn't know it because you cut it short. That's the misery of this business. Being right and still not making the money you should. You cut the profit because you got nervous or greedy, or you wanted to show the boys down the line that you'd scored. But the real money, the kind that changes your account, comes from catching the big swing and staying with it. Now, I'll tell you something I learned in the bucket shops before I ever hit the floor of the exchange. Those little backroom joints weren't much, but they were a school. You'd learn fast, or you'd get cleaned out. I learned that a man can be right a dozen times and still lose. Why? Because he doesn't sit tight. He wants to jump in and out, grab a point here, 2 points there. He's working harder than a street peddler, and at the end of the week he's just as broke. The ticker was talking, sure, but he wasn't listening. He was just grabbing. Do you know the feeling of catching a stock at the beginning of a move? It creeps higher, slow at first, then faster, like a freight train gathering steam. The tape starts showing you big prints, heavy volume, and you feel it. This is the real thing. But what do most fellas do? They take the quick profit and step off the train at the first station. They don't ride it to the end of the line, and then they stand there on the platform watching it roar away without them. That's when it burns. That's when they start asking themselves why they sold. The rule that helps you catch the big moves isn't about knowing everything. You don't have to know all the whys and hows of what's behind it. You just have to recognize the move when it starts, and then you have to do the hardest thing of all. You have to wait. That's the part nobody likes to hear. Waiting. Sitting. Doing nothing. But that's the rule. That's the discipline. It's not glamorous. It doesn't make you look smart in front of your broker, but it pays. And in this game, the only applause that counts is the balance in your account. I can remember times when I was dead sure of myself, but I didn't wait. I'd sell too quick. I'd pat myself on the back for taking a profit, like a fool, and then I'd watch the stock keep on climbing. I was right, but I didn't get paid for it. That's the bitterest lesson a trader can take. You know what it feels like to be right and broke at the same time. That's worse than losing outright. At least when you lose, you know you were wrong. But when you're right and you still lose, it makes you question your own nerve. So the rule, if you want to call it that, is this: learn to hold on when you're right. Learn to recognize when the tape is showing you a genuine trend, not just a jiggle or a little manipulation, and then stay put. Have you ever noticed how the biggest fortunes in Wall Street history weren't made from dozens of trades, but from a handful of big moves? That's not an accident. It's the law of the market. The market doesn't hand you riches in dribs and drabs. It gives you a fat harvest once in a while if you've got the patience to tend the field. Most traders, they can't do it. They haven't got the patience. They need action. They need to buy, sell, chatter, check the ticker every minute. They confuse motion with progress, but the market doesn't care about their nerves. The market rewards only the man who can spot the line of least resistance and follow it until it stops. That's the whole business, boiled down. It's simple, but it's not easy, and I've seen 1,000 men go broke because they couldn't follow that one rule. You see, prices don't move in straight line. They zig, they zag, they shake out the weak hands before resuming the move. That's where most people get thrown off. A little reaction, a dip, and they panic. They think the move is over. they sell, and then the stock takes off again without them. Haven't you done that yourself? Haven't you sold on a dip only to watch it reverse and go higher than ever? That's the market's way of testing you. It asks, do you believe in your position, or are you just renting it for a quick turn? If you don't believe, you get shaken out. If you do, you ride the big swing. Now don't mistake me. I'm not telling you to marry a stock. I'm not saying you should hold through thick and thin like some sentimental investor. No, sir. I'm saying you should recognize the difference between a natural reaction in a bull move and the real end of that move. That's a skill. That's tape reading. And it takes years to learn. But once you've got it, once you can feel the life of the market in your fingertips, then you'll know when to sit and when to quit. And when you know that, you'll catch the big ones. I'll give you an example. Back in one of those campaigns when I was younger, I bought a stock that started to move. It wasn't a flyer. It wasn't one of those little one-day wonders. No, it was a solid leader, and it began its climb. I had every reason to believe it was a bull move, the kind that lasts months. But what did I do? I sold after a couple of points. Why? Because I wanted to prove I could make a profit. Because I was afraid it might slip back on me. And what happened? That stock ran 20 points higher without me. I was right, but I was wrong. Do you know what that taught me? That in this game, your biggest enemy isn't the market, it's yourself. The ticker is impartial. It doesn't care if you eat steak or beans. But your own nerves, your impatience, your vanity, those are what rob you of the big profits. So, the rule that catches the big moves is as much about mastering yourself as it is about mastering the tape. And here's something most people never understand. There's more danger in selling too soon than there is in holding too long, if you've judged the move right. Think about that. A man who sells too soon may never get another chance to get back in at a good price. He's out, and the stock is gone. But a man who holds a little too long may give back a slice, but he still keeps the bulk of the move. Which one would you rather be? The fellow who took crumbs while the cake was still on the table, or the one who at least had the feast and paid a small bill at the end? Let me ask you another thing. Do you believe you can outgas the market every day, every week? If you do, you're fooling yourself. Nobody does that? Not me, not anyone. The market will trick you more often than you trick it. So if you can't be right all the time, wouldn't it make sense to make the most out of the times you are right? That's where the big moves come in. That's where the real profits are. 1 or 2 of those in a year can make all the difference, while 100 little trades will just wear you out. The market gives you chances, but it doesn't give you many. The trick is to be ready for them, and then to have the grit to ride them out. It's not about brains. It's not about being the smartest fellow in the room. It's about patience and nerve. Can you hold when the tape is shaking? Can you wait when everyone around you is selling for a quick turn? That's the test. And if you pass it, you'll have the big move in your pocket. I've said before that a man must make his own rules in this game, because no 2 men are alike. But if there's one rule that comes closest to universal, it's this one: when you're right, sit tight. Don't try to be smarter than the trend. Don't think you can dance in and out without losing your place. Because 9 times out of 10, the fellow who jumps off the train doesn't get back on. And if he does, it's at a much worse price. Haven't you seen it? Haven't you tried it yourself? You sell, thinking you'll buy it back cheaper, and then the stock never gives you the chance. It just keeps running. Now, I can almost hear you asking, but Jesse, how do you know when it's a big move and not just a small one? That's the art of the game, friend. That's where tape reading and experience come in. There's no formula that tells you. You have to feel it, like a horseman feels his mount. The tape will tell you if you've got a genuine move underway. The volume, the way the stock absorbs selling, the way it advances on small buying, that's your signal. But once you've seen it, once you're convinced, the rule is simple: hold. Sit tight. Don't argue with the tape. And don't let your neighbors sway you. You'll always hear chatter: sell now, take the profit, don't be greedy. But those same voices will be watching the stock climb and wishing they were still in. Are you trading for their applause, or are you trading for your own account? That's the question you've got to answer. The market rewards patience more than cleverness. That's a truth most men never come to terms with. You see them crowding around the ticker, restless, eager to outwit one another, trying to prove they've got the sharpest brain on the street. They'll study every jiggle in the tape, every rumor that drifts across the room, and they'll trade like mad dogs chasing their own tails. They believe that by showing how quick and clever they are, they'll win. But the market doesn't pay for cleverness. It doesn't pay for speed or for talking smart. It pays for patience, and patience alone. Let me ask you something. Have you ever noticed how the fellow who brags about his latest quick trade never seems to have much to show for it in the long run? He'll tell you about a point here, 2 points there, how he slipped in and out and beat the other fellow to the punch. But when you ask him about his account, it's thin. Why? Because all his cleverness doesn't amount to much against the market's slow grind. He's feeding on crumbs while the man with patience is sitting on a banquet. The clever trader believes he can dance around the market. He thinks every reaction is a chance to dart in and out, to grab a little profit before the next man. And for a while, he might even seem successful. The market will sometimes reward quickness with a handful of dollars, just to keep him coming back. But the real swing? The kind that takes a stock from 10 to 50, or from 50 to 10, that's not for the clever man. That's for the patient man who sees the move beginning and has the grit to ride it. Patience in this game is harder than anything else. You can learn to read the tape. You can study the character of volume and price. You can train your eyes to see the difference between a natural reaction and a real reversal. But none of that will do you a bit of good if you can't sit still when the time comes. The man who can't wait, who has to act, who has to prove he's clever every hour, he'll bleed his profits away by inches. Haven't you done that yourself? Made a fine entry, then spoiled it by nibbling at the move instead of letting it ripen. That's the price of cleverness without patience. I can tell you from my own mistakes. When I was younger, I believed I had to trade all the time. I thought being a trader meant constant action. Buy this morning, sell this afternoon, short tomorrow. And sure enough, I had good judgment often enough to be right. But at the end of the month, what did I have? Churn. A lot of work, a lot of strain, and not much money. Then I looked back at the charts, at the tape, and I saw that if I had simply bought and held the right line, if I had just sat tight with patience, I'd have had 10 times the profit without half the trouble. That's when I began to see it plain the market pays the patient man. Not the man who boasts of being first or quickest, but the one who waits for the right opportunity and then waits again while it unfolds. This isn't about laziness. Patience doesn't mean sitting in a rocking chair and doing nothing forever. It means knowing when to act, and more importantly, when not to act. Most of the time, the best trade is no trade at all. Most of the time, the clever man will run himself ragged chasing shadows, while the patient man conserves his capital and his nerves, saving both for the rare moments that count. Think about it. A bull market can last months, even years. A bear campaign can tear prices down in great sweeping waves. Those are the times when fortunes are made. But if you can't sit through the days when the market is dull, or the weeks when your stock pauses, you'll never be in position to ride those moves. You'll be out, chasing some little sideshow, while the real opportunity marches on without you. Patience is the price of admission to the big game. I've seen hundreds of clever fellows go broke because they couldn't wait. They had fine judgment, but no patience. They wanted to prove themselves every day. The market doesn't need daily proof of your cleverness. The market demands your obedience. Do you know how many traders ruin themselves by trying to outsmart a trend? They think they're clever enough to sell at the top and buy back at the bottom. They think they can squeeze every last point out of the move. But the patient trader doesn't try to pick the exact top or bottom. He gets in when the line of least resistance is clear, and he stays until the tape shows the move is over. He may not get every point, but he gets the meat of the swing. And that meat is worth more than all the scraps cleverness can fetch. Have you ever watched the market shake out the nervous hands? It'll run up, then pull back, then surge again. Each dip scares out the clever traders. They think they're outsmarting the rest by selling ahead of trouble. But the patient man sits tight. He understands that reactions are part of the move, not the end of it, and when the stock resumes its climb, he's still there, riding it, while the clever men are scrambling to buy back in at higher prices. Tell me, which man would you rather be? Patience doesn't just keep you in the big moves, it keeps you out of trouble, too. Clever traders want action, so they'll force trades when there's nothing to do. They'll see a stock moving a point or two and think they can scalp it. But the market doesn't reward forced trades, it punishes them. The patient trader can watch the same stock without lifting a finger, waiting for the day when it breaks out with real strength. Then, when the clever men are worn out and broke, the patient man steps in and takes the prize. I'll tell you another thing. The longer I've traded, the more I've learned that patience isn't just a virtue, it's a weapon. The market is designed to fool the impatient. It will tease, tempt, and trick you into acting too soon. It will hand you small profits and then snatch them back. It will whisper that you must act now or lose out. But if you can sit, if you can keep your hands still, you'll see through those tricks. The market shows its hand only to the patient. The clever man, too eager, never sees it clearly. Now, don't mistake cleverness for intelligence. There are plenty of bright men in this game. Men who can calculate faster than you or me. Men who know every statistic. Men who can talk circles around anyone on the exchange floor. But all their cleverness doesn't make them rich. The poorhouse is full of clever men who couldn't wait. The graveyard of traders is built on cleverness. Meanwhile, the patient men, the ones who could sit through weeks of nothing and months of waiting, those are the ones who built fortunes. Think of it like farming. The clever man wants to dig up the seed the next day to see if it's sprouting. He keeps disturbing the ground, pulling it up, planting again. He works hard, but he harvests nothing. The patient farmer plants once, tends the soil, and waits through the season. He may look lazy compared to the other, but when the time comes, he gathers the crop. That's the difference between cleverness and patience in the market. One is restless motion without reward. The other is steady waiting with abundance at the end. Ask yourself this: when was the last time you missed a fortune because you couldn't wait? How many times have you cut a move short, sold too early, only to watch the stock climb higher and higher? Did your cleverness pay you then, or did it cost you? If you had been patient, if you had trusted the move and your judgment, what would your account look like now? The truth is, patience feels harder because it feels like doing nothing. A man wants to act. He wants to prove himself. But the hardest action in the market is no action. To sit tight while the market tests you, to hold through the small storms, to wait for the move to ripen that takes more strength than a dozen clever trades. And it's that strength, that patience, that the market rewards. Riding a true trend tests nerve and discipline more than intellect. That is something most men don't understand until they've lost enough money to buy the lesson twice over. Everybody wants to believe this game is about brains, about being the smartest fellow in the room, about knowing something the other man doesn't. They think if they read enough reports, if they follow enough gossip, if they keep their ear close enough to the ground, they'll outthink the market. But let me tell you, the market doesn't care how clever you are. It doesn't pay you for knowing 100 reasons why a stock should go up or down. It pays you for having the grit to hold when you're right, and the discipline not to act when you're wrong. Let me ask you, have you ever found yourself in a trade where the stock started to run exactly the way you wanted, and suddenly your heart started pounding? Not because you were wrong, but because you were right. That's the strangest part of this business. Being right can be harder to handle than being wrong. When you're wrong, you cut your loss and move on. But when you're right, when the move is alive and growing, the real test begins. Do you have the nerve to stay in? Can you sit through the reactions, the dips, the rumors, the noise without flinching? That's not about intellect. That's about character. A true trend is like a river in flood. It carries everything with it, sweeps away resistance, and for a time it seems unstoppable. But the river doesn't flow in a straight line. It curves, it swirls, it eddies. To ride it, you have to trust the current even when it drags you sideways for a while. That's where men fail. They see a counter move, a little reaction, and they panic. They think their brains have spotted the end of the trend. They sell, congratulating themselves on being clever, and then they watch the river sweep onward without them. Haven't you done that? Haven't you sold just before the stock made its biggest move? That's the test of nerve, and most men flunk it. Discipline is another thing entirely. It's easy to talk about discipline when you're sitting in an armchair, when the ticker is silent. But when the tape is running, when prices are jumping, when the room is buzzing with fear and greed, that's when discipline matters. Discipline isn't about knowing what you should do, it's about doing it when your whole being wants to do the opposite. You may have rules, you may have principles, but in the heat of the market, they'll be tested. And only the man who can hold himself steady, who can obey his own rules without exception, will come through with profits. Think of the great bull moves in history. They didn't happen in a day. They stretched over weeks, months, sometimes years. A man could buy early and make a fortune if he stayed in, but most didn't. They sold after a few points. They rebought too high. They got shaken out on a dip. Their brains told them a dozen stories. Take the profit before it disappears. The market can't go higher. This little decline is the top. Intellect led them astray because the market doesn't unfold neatly the way a man's mind wants it to. Only nerve and discipline could have kept them in. You know what nerve really means in this business? It's not recklessness. It's not doubling up and hoping for the best. Nerve means holding steady when the market tests you. It means trusting your judgment when the tape confirms it, even if the crowd disagrees. It means ignoring the quiver in your stomach when prices wobble. Nerve is silent, steady, unshaken. And without it, you'll never ride a real trend to the end. Discipline, on the other hand, is cold. It doesn't care about hope or fear. Discipline says cut the loss when the market proves you wrong. Discipline says don't chase when you've missed the move. Discipline says sit tight when you're right, no matter how restless you feel. Discipline doesn't shout, it whispers. And most men don't listen because their emotions drown it out. They want excitement, they want comfort, they want reassurance. Discipline gives none of that. It only gives results if you obey it. Tell me, what good is intellect when your stock drops 3 points in a day and the ticker is printing red? Your mind races, calculating reasons, searching for explanations. But the market doesn't answer you. It doesn't tell you if this dip is the end or just a shakeout. Only your nerve and your discipline can keep you steady until the tape shows the truth. Intellect makes you argue with the market. Discipline makes you obey it. Which one do you think gets paid? I remember a time I was in a big bull move. Everything lined up, the tape was screaming strength, and I knew I was right. But then came a 2-week reaction. Prices fell, the newspapers screamed about disaster, and the room was full of men swearing the top was in. I had to sit there, day after day, watching my paper profits shrink, hearing every kind of gloomy talk. My brain wanted to believe them. My nerves were tested like never before. But the tape told me it was only a natural reaction. Discipline told me to sit tight. So I did. And when the stock turned, it doubled again. That profit didn't come from intellect. It came from holding steady when it would have been easier to run. Have you ever noticed that the richest traders aren't the ones who boast about being the smartest? They don't talk about theories or predictions. They talk about patience, about courage, about discipline. They know the market humbles the clever and rewards the steady. You can outthink a rival, you can outtalk a broker, but you can't outthink the market. It's too big, too old, too wise. The only way to win is to ride with it when it shows you the way, and that requires nerve more than intellect. Another thing most men never grasp is that intellect often becomes a trap. A clever man sees too much. He notices every little movement, every reaction, and he wants to act on them. His brain can't rest. But a true trend is bigger than the noise. A stock that's destined to go from 30 to 80 doesn't do it in a straight climb. It jiggles, it shakes, it scares. If you're too clever, you'll see reasons to sell at every turn. If you're steady, if you've got discipline, you'll sit and let the move unfold. That's why I say the market tests your nerve and your discipline more than your brain. The market already knows what it's going to do. Your job isn't to outthink it. Your job is to recognize it and stay with it. The brain wants to interfere, to complicate, to argue. The nerve keeps you from flinching. The discipline keeps you from breaking your own rules. And when the move is over, when the tape shows it's done, the disciplined man takes his profit. The clever man, if he lasted that long, probably sold too soon or bought back too late. So ask yourself this: do you want to be the cleverest fellow in the room, or do you want to be the richest? Because in this game, those two things rarely go together. The clever man wants to win arguments, to show he's smarter. The disciplined man wants only to obey the market and take its gifts. The man with nerve doesn't blink when the test comes. And at the end of the campaign, when the trend has run its course, it's not intellect that fills the account, it's the iron nerve and the cold discipline that carried a man through. Nervousness and impatience are the trader's real enemies, not the market. Most men think they lose because the market fooled them, or because some big operator tricked the crowd, or because the news didn't line up with the price action. But when you strip it down, when you're honest with yourself, you see it wasn't the market that did you in. It was your own nerves, your own restless hands, your own inability to wait. The market is neutral, always has been. It doesn't care about your hopes or your fears. It just moves along its line of least resistance. But nervousness will make you jump at shadows, and impatience will make you act before the time is ripe, and that's what empties pockets. Let me ask you, how many times have you cut a winning trade short just because you were too nervous to sit? You had the right stock, you were on the right side, but you couldn't stand the little dips, the waiting, the uncertainty. So you sold out, took a few points, and congratulated yourself on being safe. And then you watched the stock climb 10, 20, 30 points more without you. Did the market beat you that time? Or did your own nerves beat you? That's the truth that stings. Impatience works the same way, but in the opposite direction. A man can't sit idle. He thinks trading is about action, about always having something on. So he pushes into the market when there's nothing to do, when the tape is muddy, when the line of least resistance isn't clear. He buys because he wants to be in, not because the market is telling him to. And 9 times out of 10, the market punishes him for it. He gets shaken out by a move that never had a chance, and then he blames the market for being tricky. But it wasn't the market. It was his impatience. I remember in my early days, back in the bucket shops, I felt that same hunger for action. You could stand in those smoky rooms with the ticker clattering, and your blood would start pumping just from the sound of it. I couldn't sit and watch without trading. Every tick looked like a chance, and every pause made me fidget. So I'd buy, then sell, then buy again, until the only thing I had at the end of the week was commissions and losses. The market wasn't beating me, I was beating myself to death with impatience. The market doesn't demand that you trade every day. It doesn't ask for your cleverness at every tick. It gives only a few real opportunities, and the rest is noise. Nervous traders can't see the difference. Impatient traders won't wait for it, and so they end up broke. Haven't you seen that happen around you? A fellow who just can't keep still, always chasing something, always needing action. He's busy from morning to night, but when you look at his account, it's smaller every month. That's not the market's fault. That's impatience dressed up as trading. Nervousness is even more dangerous when you're in a winning position. That's when it whispers in your ear, take the profit, you don't want to lose it. It tells you every little dip is the start of the end. It makes you stare at the ticker until every wiggle looks like danger. And sooner or later, you sell just to calm your nerves. Then you watch the stock go higher, and you kick yourself. You were right, but your nerves cheated you out of the payoff. You know what the cruelest part is? Nervousness and impatience make a man feel like he's doing something useful. Selling too early feels safe. Trading too often feels productive. You think you're protecting yourself, or you think you're making progress. But really you're just spinning your wheels, grinding down your capital and your courage. The market doesn't care one way or another. It's not your enemy. It's your nerves and your restlessness that are eating you alive. I'll give you an example. There was a time I bought a leader stock in the middle of a strong bull market. Everything pointed up. The tape was strong, the reactions were mild, the volume showed accumulation, but the stock wobbled a couple of points after my entry, and my nerves started in on me. You're wrong, they said. You're going to lose. I wanted to sell just to get relief, but my rules told me otherwise. The trend was intact. My judgment was sound. If I sold, it wouldn't be because the market told me to. It would be because my nerves couldn't stand the strain. So, I held. The stock went up 20 points in the months that followed. You know, people always ask me how a man makes millions in the market. They think there's some magic trick, some hidden formula that only a chosen few know. But let me tell you straight, there are no miracles in trading. There's only observation, patience, and the courage to act when the market shows you the truth. Have you ever noticed how most folks will listen to every opinion on the street, yet ignore what the tape itself is saying? That's the first mistake. The market is always talking, if you know how to listen. I didn't start with millions. I started with a notebook, a sharp pencil, and a willingness to watch every tick of the tape until it made sense to me. What do you think I learned? That the tape doesn't lie. Men lie, newspapers lie, rumors lie. But the market tells the plain truth of supply and demand, of fear and greed, of who is strong and who is weak. And if you learn to read it, you'll know where the money's flowing before the crowd even realizes it. Most traders want action. They want to be in the market every day, buying here, selling there, taking 10 little profits and counting themselves smart. But I learned early, it isn't the trading in and out that makes a fortune. It's the big swing, the big move, the one trend that carries you when you have the courage to ride it and not jump off at the first bump. How many times have you sold too soon, only to watch the stock march higher without you? That pain is the tuition every trader pays. The lesson: sit tight when you're right. Now, don't misunderstand me. I don't mean sitting tight on hope. Hope is the death of a trader. You sit tight on judgment, on the recognition that your position is in harmony with the main trend of the market. If you're wrong, you must cut your loss without hesitation. A small loss never hurt a man. But a big one, well, that's the rope around your neck. Have you ever held onto a stock because you thought, it'll come back? And what happened? It kept sinking until your capital was gone. That's not trading. That's gambling, and the market has no mercy for gamblers. I used to haunt the bucket shops in my youth, laying down small bets on price moves. It wasn't the money that mattered back then, it was the game, the thrill of seeing if my read was right. Every rise and fall taught me something. I discovered patterns that repeated, day after day, no matter the stock. Isn't it curious how human nature never changes? 100 years ago, traders panicked and chased just the same as today. Fear and greed don't evolve. They only disguise themselves in new tickers. You see, trading is not about predicting tomorrow's news. It's about recognizing today's trend. The market discounts everything. If steel is going up, it's not because of what you'll read in the papers tomorrow. It's because the insiders, the men who know the business, are already buying. Their footprints show in the tape long before the headlines. Have you ever wondered why a stock rises before good news breaks? That's the market whispering the truth to those who know how to listen. There's another secret, and it's one few ever master: self-control. The greatest danger in trading is not the market, it's you. Your own impatience, your own vanity, your own refusal to admit you're wrong. I can give a man every rule I ever used, every observation I ever made, and still he'll lose because he won't follow them. Why? because discipline feels harder than gambling. Do you recognize that in yourself? That hunger to act when the right move is to wait. Let me tell you something that will save you more than money. It will save you years of wasted effort. The big money is not in the buying and selling, it's in the waiting. Anybody can buy, anybody can sell. But to buy right and sit tight, that is the test of a real operator. When you've placed your money in line with the tide of the market, and you have the strength to hold it until the tide has run its course, that's where the millions are made, not in jumping in and out, but in staying put when it counts. Think of the market like a great ocean. The waves come and go, splashing the little traders about, drowning those who swim too close to the rocks. But the tide that's steady, powerful tide, if you catch that, you're carried to distant shores. Now ask yourself, are you chasing the waves, or are you waiting for the tide? That one question will tell you if you're on the road to success or ruin. I've seen men with more information than me lose everything because they couldn't master themselves. I've seen others with no inside tips, no special access, become wealthy because they trained their eyes to read the chart and their hearts to stay calm when the crowd was screaming. Which would you rather be, the man chasing whispers or the man who sees the truth on the tape? The truth is, a trader must be a student for life. The market never graduates you. Every cycle, every panic, every boom teaches again the same lessons. Yet how many traders forget them the moment greed blinds their eyes? Do you know what separates the veteran from the novice? Not the number of years, but the scars carried from mistakes survived and lessons learned. If you've lost money, don't waste the lesson. Ask yourself, why did you lose? Was it because the market was wrong, or because you were? Now, let's speak plain about money. To build wealth in trading, you must treat your capital like your army. Each dollar is a soldier. Would you send your army into battle carelessly, without strategy, without knowing the terrain? Of course not. Yet traders do it every day, tossing their dollars into hopeless fights. Preserve your soldiers. Send them only when the chance of victory is on your side. And if the battle turns against you, retreat quickly. Better to lose a handful of men and fight another day than to see your army slaughtered because of pride. What's the greatest enemy of the trader? Overtrading. The urge to always be in the market. I've seen it ruin men with the best of minds. They can't bear to be idle. But the market doesn't reward activity, it rewards correctness. Would you rather make 10 trades with small profits, or one trade that doubles your stake? The answer seems obvious, yet few have the patience to wait for the one trade that matters. Consider this: when a stock breaks out of a long range, that's not an accident. That's accumulation or distribution that has been going on for weeks, maybe months. The insiders have been preparing. When the move begins, it can carry far, much farther than the average trader believes possible. And what do most do? They sell too soon, because they fear losing the small profit they've made. Have you ever cut short a winner, only to watch it climb for weeks without you? That's the curse of small thinking. Train yourself to think in trends, not ticks. And let me remind you, never average down. That road leads straight to ruin. When you're wrong, admit it, cut it, and move on. Adding to a losing position is nothing more than refusing to admit your mistake. Would you add more water to a sinking ship? Then why add more money to a sinking stock? Save your capital for when you're right, not when you're wrong. The market is a stern teacher. It punishes arrogance and rewards humility. When you think you've mastered it, that's when it humbles you. But if you approach it with respect, with patience, with the readiness to learn every day, it will pay you handsomely. Ask yourself, are you trading to satisfy your ego or to build lasting wealth? The answer will decide your fate. I'll tell you something most won't admit. The millions I made weren't from constant action. They came from a few great moves, made at the right time, held with conviction, and protected with discipline. All the small trades in between were distractions, practice at best, losses at worst. The real fortune lay in catching the great bull markets and the great bear markets, not the little ripples in between. Do you have the patience to wait for those great opportunities? Or are you still chasing the daily noise? A trader must learn to think independently. The crowd will always try to sway you. Newspapers, tips, opinions, all of them are distractions. The market itself is the only authority. When I was young, I thought I needed advice. But the more I listened, the more I lost. Only when I trusted the tape, and my own judgment of it, did I begin to win. How about you? Are you still letting others tell you what to think? Or have you learned to see with your own eyes? There's another truth I'll give you, one that's cost men their fortunes because they wouldn't believe it. Markets are never wrong, opinions are. When the market moves against you, it's not the market's mistake, it's yours. Don't argue with it. Don't reason with it. Don't fight it. Accept it, adjust, and align yourself with it. Would you try to stop the tide with your hands? Then why resist a market trend with your pride? And don't forget the hardest work in trading is not analysis. It's sitting alone with your decisions. The loneliness of trading breaks many men. They want the comfort of agreement, the reassurance of the crowd. But the market rewards independence, not conformity. Can you stand alone when your judgment tells you one thing and the crowd screams another? That's the test of a true trader. You may think trading is about charts and numbers, but at its core it's about character. Patience, discipline, courage, humility, these are the tools more valuable than any technical system. Have you noticed how two men can use the same method, yet one becomes rich and the other poor? It isn't the method, it's the man. The big money is made in the big swing, not in frequent trades. That's a truth I learned not from books or lectures, but from the harsh lessons of the market itself. Most traders think success comes from being busy, always buying and selling, in and out of positions, showing activity as if activity itself proves intelligence. But the market doesn't pay you for activity, it pays you for being right. And more than that, it pays you for being right and staying with it long enough to let the real profits accumulate. Have you ever noticed how quickly a small gain vanishes when you cut it short, while the rare occasions you held on gave you the kind of profit that could cover 10 small losses? That is the essence of the big swing. When I was young, I wanted action. I wanted to feel alive in the market every day. So I would take quick trades, scalp for eighths and quarters, and call it profit. But I soon realized that these little profits were nothing compared to what I gave back when one bad trade ran against me. My small wins were like pebbles, but my losses were like boulders. That's when it struck me the way to real wealth was not in those pebbles, but in waiting for the boulders to move and riding along with them. Have you ever found yourself exhausted from too many trades, only to look back and realize you would have been richer doing less? The crowd hates waiting. That's why most men fail. They can't bear to hold a position through the dull times when nothing seems to be happening, or through the first shakeouts when the market tests your nerve. They want quick satisfaction. But the big swing doesn't pay the impatient. It pays the one who can recognize when a genuine trend has begun and then hold on, sometimes for weeks, sometimes for months, while the crowd jumps in and out, growing tired and discouraged. The market rewards the man who sits still while others lose their nerve. Think about the great bull markets. When a stock breaks out of a base, that's not the time to take 10 little scalps and move on. That's the moment to recognize that something larger is at work. The insiders, the men who know the business best, have been quietly accumulating, and now the tide is ready to roll. If you catch that tide and hold your position, the market will do the heavy lifting for you. But only if you let it. Would you rather grab a handful of loose change or wait for the vault door to open? That's the difference between the small trader and the one who makes millions. Of course, there's a trap here, and it catches most men. They believe in the big swing, but they don't know the difference between a real trend and a false start. They hold when they should cut, hoping that a losing position will turn into a winner. That's not sitting tight on judgment, that's sitting tight on hope. And hope is a disease in the market. The secret is to distinguish between being wrong and being early. If you're wrong, you must get out. If you're early, you must endure the waiting. Can you tell the difference? That's where study, experience, and discipline come in. I'll tell you what makes the big swings so profitable: compounding movement. A stock that moves a few points might tempt you to take your profit quickly, but what if it's beginning a run of 30, 40, or 50 points? That's the kind of move that can multiply your account, not just fatten it. Yet most traders never see such profits because they jump ship too soon. Why do they do it? Because the little profit looks real, and they fear losing it. Fear robs them of fortune. Have you ever sold a stock with a small gain, only to watch it double in price afterward? That pain is the tuition you pay for not trusting the big swing. Now, don't mistake this for laziness. Waiting for the big swing is not doing nothing. It's studying, observing, preparing. It's keeping your capital safe and your powder dry until the right opportunity appears. Then, when the moment comes, you strike with size and conviction, because you know the odds are in your favor. Most traders scatter their capital in small trades, leaving them weak when the true chance arrives. But the operator who understands the big swing preserves his strength so he can ride the move that matters. Would you rather be busy or be rich? Another lesson about the big swing is psychological. It's not easy to hold a winning position as it grows. The temptation to take your profit nags at you every day. The market shakes you out with reactions and pullbacks. Friends tell you to be careful. The newspapers warn of doom. Everything conspires to make you doubt. Yet if your judgment is right, if the market confirms your position, the greatest test of all is to do nothing to resist the urge to take the small profit and instead sit for the large one. That's why so few men ever make millions. They lack the strength to do nothing when nothing is the hardest thing of all. And let's be honest, the big swing is where real wealth is built, because it aligns you with the natural rhythm of the market. Markets trend because human emotions drive them too far in both directions, up in euphoria, down in despair. Your job is not to catch every tick, but to catch the wave of emotion and ride it until it exhausts itself. That's when fortunes are made. The scalper can make a living, perhaps, but the speculator who holds for the big move is the one who builds lasting wealth. Which path are you on? I remember holding positions in great bull markets where the stock climbed day after day, week after week, while the crowd sold too soon. I watched them congratulate themselves on their small gains, only to kick themselves later when the real move became obvious. My millions didn't come from cleverness in guessing each day's action. They came from sitting still when I was right, letting the market pour profits into my lap because I had the courage to hold on. That's the hardest lesson, but also the most rewarding. You see, the big swing doesn't just build wealth, it builds character. It teaches patience, courage, and the mastery of your own impulses. Every day you hold a winning position against the nagging voice of fear. You grow stronger. Every time you refuse to snatch at a small gain because you trust the larger trend, you train yourself to think like a true trader. And over time, this habit separates you from the crowd. The crowd lives on crumbs. The operator lives on banquets. Do you want crumbs, or do you want a feast? The market is full of noise ticks, headlines, opinions. All of it distracts you from the truth that wealth is built in silence, in patience, in the calm of sitting with a position that is moving your way. The market pays those who can ignore the chatter and keep their eyes on the main current. When you align with that current, you don't need to be clever every day. You'd only need to be right on the big move, and then stay right by staying put. That's the essence of it. The big money is in the big swing, not the small trade. It requires patience, judgment, courage, and self-control. But once you understand it, once you've lived through it, you'll see that all the small trades you used to make were distractions, little fires keeping you busy, while the real blaze roared in the distance. The operator doesn't chase sparks. He waits for the inferno, and when it comes, he rides it until there's nothing left to burn. Discipline and self-control matter more than tips or news. That's a truth I learned not once, but 100 times, because every time I thought I could sidestep it, the market punished me. A trader can know all the patterns, all the signals, all the theories in the world, but if he can't control himself, if he can't stick to his own rules, he will end up broke. Have you ever noticed how easy it is to write down rules, yet how hard it is to follow them when the market starts tugging at your emotions? That's the battlefield of trading, not the chart, not the ticker, but the space between your ears. When I was young, I used to think tips were a shortcut. A whisper from the right man, a hint from someone in the know-it-all seemed like a path to fast profits. And sometimes they worked, which was the worst part, because that gave me the illusion that I had found an edge. But every time I leaned on tips, I found myself holding positions without conviction. Positions I didn't understand, positions I couldn't defend. When they went against me, I froze, because I had no reasoning of my own to rely on. Do you know that feeling? When you buy because someone told you to, and then the market moves the wrong way, and suddenly you're lost. That's the danger of tips. News isn't much better. By the time you read it, the market already knew it. Prices move before headlines appear. The insiders act, the tape records it, and then the papers write about it after the fact. If you trade on news, you're already late to the party. And besides, news excites emotions. It makes you want to buy in a frenzy when it's good and sell in panic when it's bad. But discipline means ignoring the noise and listening only to what the market is telling you. Can you resist the urge to act when the whole world is reacting? That's where discipline separates the trader from the crowd. Self-control begins with admitting you are not bigger than the market. The market is always right. If it moves against you, that's not unfair. That's not a mistake, it's reality. You can't argue with it. You can only adjust. A man without self-control digs in when he should cut loose, adds to a loser when he should admit defeat, and dreams of a turnaround instead of facing the facts. How many times have you watched a small loss grow into a disaster because you refused to take it quickly? That's not the market robbing you. That's you betraying yourself. Discipline is not glamorous. It's not exciting. It's not the kind of thing people boast about. Nobody brags about cutting a loss quickly or sitting in cash while waiting for the right setup. But those are the acts that build fortunes quietly, while the gamblers brag about their lucky wins and then disappear when their luck turns. The disciplined trader survives, grows, and thrives because he respects his own rules more than his impulses. Would you trust a man who ignores the rules of the road when driving your carriage? Then why trust yourself with money if you ignore your own trading rules? One of the hardest disciplines is patience. The market offers opportunities, but not every day, not every week. There are stretches of time when the wise trader does nothing, when the best trade is to sit on your hands. Yet most can't bear it. They crave the action, the thrill of a bet. That craving is what destroys them. Discipline means waiting not for movement, but for the right movement, the one that aligns with your method, your rules, your judgment. Can you sit idle while the crowd rushes about? That's the measure of patience. Another form of self-control is knowing your own size. Too many traders bet too much on one idea, putting themselves in a position where one mistake can wipe them out. Discipline means sizing properly, risking only what you can afford to lose on a trade, and keeping enough in reserve to fight another day. It's like an army general. Would he send his entire army into the first battle, leaving nothing in reserve? Of course not. But traders do it all the time, and then they wonder why one bad move destroys them. Self-control means resisting the temptation. Emotions are the real enemy. Greed whispers, hold longer, double down, take more. Fear screams, get out now, don't wait, don't trust your plan. Both are liars, but they speak in voices louder than reason. The only way to silence them is with discipline, with rules you obey no matter how you feel. Have you ever watched your hands shake as you placed an order, knowing it wasn't part of your plan, but you couldn't resist? That's emotion steering your ship into the rocks. Self-control is the hand that holds the wheel steady against the storm. I've seen men ruin themselves not because they lacked intelligence, but because they lacked discipline. Brilliant men, quick thinkers, full of knowledge, but they couldn't master their impulses. They chased tips, they bet too big, they let losses run, they ignored their own rules. And the market doesn't care how smart you are if you can't control yourself. On the other hand, I've seen ordinary men, with no special brilliance, become wealthy because they stuck to their discipline day after day. Which kind of trader do you think survives the genius without control, or the steady hand with rules? Self-control also means accepting boredom. The market is not always exciting. Sometimes it moves in narrow ranges, sometimes it drifts without direction. The disciplined trader accepts that and waits. The undisciplined one forces trades out of boredom, and boredom trades are almost always losers. Can you stand the boredom, or do you need the thrill? That answer may determine your future in trading. There's also discipline in success. Strange as it sounds, making money can be more dangerous than losing it, because success tempts arrogance. After a few good trades, a man thinks he can't be wrong. He throws discipline aside, bets bigger, breaks his rules, and the market humbles him. Self-control means remembering that every day is new, every trade is independent, and yesterday's success does not guarantee today's. Do you stay humble when the market has rewarded you, or do you start to believe you've mastered it? That's the test. The disciplined trader treats trading like a business. He doesn't gamble for excitement. He doesn't act on whims. He doesn't let emotions guide him. He has a plan, he executes it, and he protects his capital above all. He knows that without capital, there is no trading, and without discipline, there is no capital. It's as simple as that. The undisciplined trader may enjoy the highs and lows like a gambler at the racetrack, but in the end, he is left empty-handed. When I say discipline and self-control matter more than tips or news, I mean that they are the foundation. Without them, everything else crumbles. With them, even a simple method can succeed. The market is full of distractions, temptations, and traps. Discipline is the shield that protects you from them. Self-control is the sword that keeps you steady in the fight. Without those, you're unarmed in a battle that spares no one. And the truth is, most traders lose, not because they lack knowledge, but because they lack the strength to obey what they already know. Independence of judgment separates winners from the crowd. That's not just a fine phrase to put on a page, it's the lifeblood of a trader who lasts. The crowd will always be there, shouting, urging, whispering, luring you into its arms with the comfort of numbers. But the market does not pay you for being comfortable. It pays you for being right. And to be right, more often than not, means standing apart from the mob. Have you ever noticed how the loudest voices usually come just when a move is about to end? That's the trap of the herd, and it devours those who cannot think for themselves. When I was young, I thought it was safer to listen to others. After all, they seemed to know more. They spoke with confidence. They used figures and facts. They told stories that made sense. So I followed them. And I lost. It wasn't until I learned to trust my own judgment, drawn from the tape, the chart, and my own observations, that I began to make money. What's the use of another man's opinion if it isn't backed by your own conviction? When the market turns against you, will that man cover your loss? No, he'll be too busy covering his own. The crowd operates on emotion. They buy when they feel good, they sell when they feel fear. That means the crowd is usually wrong at the turning points, the exact places where a trader must act with clarity. To follow them is to buy at the top and sell at the bottom. Yet that is what most do, because independence is lonely, and loneliness is hard to bear. Have you ever felt the pull of wanting to be right with everyone else, even when your gut told you the opposite? That's the test, and most fail it. True independence does not mean stubbornness. It doesn't mean ignoring the market and clinging to your own view against the facts. That's just vanity disguised as independence. What it means is weighing the evidence yourself, forming your own judgment, and having the courage to act on it regardless of whether anyone agrees. The tape is your guide, not the gossip, not the newspaper, not the chatter of brokers. If your judgment is right, the market will reward you in due time, though the crowd mocks you in the meantime. Can you endure their laughter while you wait for the proof? That's the measure of independence. Think of the great moves in market history. When a stock begins its rise, the crowd is skeptical. They laugh at the first buyers. They call it overvalued. They find reasons why it cannot go higher. Only a few have the courage to step in, to trust the signs that accumulation is underway. Those few ride the stock for great profits, while the crowd finally joins in too late at the top. The same in reverse during a decline. The crowd clings to hope, repeats comforting phrases, while the independent trader sees the distribution and steps aside or even goes short. Independence earns profits while dependence earns losses. Which side would you rather be on? The hardest part of independent judgment is the silence it requires. You must stand alone with your decisions, without applause, without encouragement, often with nothing but doubt for company. But that silence is where clarity is born. If you need the crowd to reassure you, you're already lost. The market punishes dependence because dependence blinds you to reality. The tape doesn't care about your comfort. It only tells the truth. Do you have the strength to listen to it instead of to your friends, your broker, your neighbor at the club? I've seen traders destroyed by their need for agreement. They would not act until someone else confirmed their idea. By the time they had their confirmation, the move was already half over. Then they bought just as the insiders were selling. That is the curse of dependence. You're always late, always reacting, never leading. Independence may feel risky in the moment, but in truth it is the only safety, because it aligns you with facts, not opinions. The crowd is noisy, and it never stops. Every day brings new tips, new predictions, new reasons to doubt your own mind. That noise is a constant test of discipline. Can you tune it out? Can you remind yourself that markets are moved by forces deeper than gossip? If you can, you'll begin to see patterns that others miss, because you're not blinded by the chatter. If you can't, you'll spend your life chasing shadows while others quietly collect the real profits. Another danger of the crowd is the illusion of intelligence. A man feels smarter when he agrees with others. He feels safe, as though being wrong with everyone else is less painful than being wrong alone. But the market doesn't soften the blow just because you shared it with others. A loss is a loss, no matter how many people suffered it with you. Independence demands you accept responsibility for your trades. If you're wrong, it's on you. But if you're right, the profits are yours too, unshared, unborrowed, fully earned.